Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Samir Khadra of Target Investing and Sangeet Lakkar of Newberry Capital join us on the show. Many thanks to all of my guests for joining me. Today on Hot Money, we'll discuss Dr. Reddy's. They came out with their numbers. It wasn't the best of numbers and the gross margin probably was the big turning point. So we talk about Dr. Reddy's. The second stock that we want to talk about is the best bank that our analysts think that we should buy at this point of time. We discuss what's plaguing Arvind at this point of time because the counter has corrected significantly. And one stock that our analysts want to speak about, which surprised them with the numbers this time around, could be on the positive side or the negative side. So that's the menu of stocks that we will discuss. Let's start with the first one. Dr. Reddy's didn't come out with the best of numbers. Results were below estimates. It was the other income that aided the revenues. The count is down 1%. Samir, I'll start with you. What did you make of Dr. Reddy's numbers and is it worth accumulating?
So I think not right now it's worth accumulating because see, the main reason you have to look at is the US operations, and if you see their commentary as well, there was no price stability still in the system, and whatever the growth has come even on quarter is due to certain launches, and even that launches, the majority part is getting delayed. So I don't see any US operation revival any time soon unless those launches come in or the generic prices stabilize. On the AI front, the ingredients front, the margins have really squeezed out. Now when everyone says China is off and active ingredients prices are going up, that doesn't reflect in the margin of Dr. Reddy's as well. So I think there is a certain amount of stress. The cash is still stable, the inventories are stable, so working capital side is being stably driven. But for me, US is more important than Europe growing at 26% or 16%. And India somehow is showing a stabilization platform. But if you see the recent July and June data, that is tipping off. So I feel even the July and September quarter will be lower for India and US will continue to be lower.
Okay, Sangeet, what did you make of the numbers?
So I think muted set of numbers. The top line growth was hardly, I think, in low single digits. The bottom line was aided because of another income. But again, the pricing, I think, but we have seen 5 years of a down cycle in the pharma sector, especially the generics pricing in US. And I think at some point of time it should start to look up now. So I would play for two triggers, not necessarily Dr. Reddy's, but a whole host of US-based, US-focused or global generics pharma, led by Sun Pharma. So one is the pricing pressures in US getting improved. And I think there could be some surprise from some other geography. So I don't know which it could be, but I would possibly very closely look at China opportunity. So there have been some noises about the Indian pharma companies tapping into the Chinese market. But so far it's just been a noise. We haven't seen a real penetration coming through. But if that opens up, and with the kind of capabilities the pharma companies in India have, that could be a huge opportunity for next kind of upcycle, for the sector.
Okay, that's the view that's coming in on the first stock. The second one is a sector which is under tremendous amount of pressure. Counters in the banking space like RBL Bank and Yes Bank have been taken to the cleaners. What exactly should one do in the banking space? Sangeet, I'll start with you. Is there any banking stock that you would recommend to your client to buy in the fall that has happened?
So I'm going with the bellwether Kotak Bank in this turbulent times. So again, I've been maintaining that for a banking business, you cannot bottom fish with a lower or a lesser quality known banks available at less than book value or adjusted book value. I mean, the paramount essence of the banking business is your risk management. If your underwriting practices are not correct, so to say, it's best to avoid them. Kotak Bank over the years have proved themselves. So there's not, obviously it's not cheap, still trades at about 4.5, 4.7. But there has been a substantial earnings growth over last 2-3 years. In the last quarter earnings, we saw a 23% jump on all parameters. It's perhaps one of the few banks which is able to retain the CASA ratio also. All the other major banks have reported a drop in CASA ratio, but it's again maintained fairly above 50%. The cost of funding has been the best in the industry. The NPAs have been, pretty much under the GAP. And I mean, more importantly, I find it very interesting that the promoter is not letting to, go off its stake. So that also gives me a little more confidence. So I am recommending Kotak.
Oh, Kotak. What about you? Which in the banking space do you like?
So I think I would recommend to stay away, but on my watch list is Yes Bank, because I'm looking towards the QIP if they are able to pull through on that. Whenever they are able to pull through and it comes on paper, I would like to buy in over there. Now that gives me one comfort that the risk factor or the valuations factor in a lot. There might be another 10%, 15% drop from here, which I'm not denying. But anything which is showing signs of wobbling, even a HDFC Bank or a Kotak, is muted on their commentary in a certain way. And the valuations are high. So that gives more room to kind of give a negative surprise going forward. So I would be a little conservative while investing in banks or NBFCs as of now.
Okay. The third stock we want to talk about is Arvind Limited, trading at a 52-week low. I think textiles as a space has seen tremendous amount of pressure. Arvind is one of the stocks. After this is the pure play textile business that is there, which is also down in trade. So it's down in trade. What do you make of Arvind? Why do you think that it's under so much pressure?
So I think two factors. One, once they got the subsidiaries listed, one flow went through there, so it came as a holding discount as well. Second of all, the main business which they run is a textile fabric business, is right now heavily going through a downturn. In terms of debt pressures, it's mainly on Arvind Limited, which is there right now. And third is the US benefits, which the GSP benefits which have been withdrawn. Textile was one of the main beneficiaries of there. And lastly, I feel the exclusion of F&O from September onwards. So that also puts a pressure when these kind of things get announced on the stock as well. So I think these all factors are pushing it through on the balance sheet, P&L and the technical part.
Yeah. Sangeet, what's your sense on Arvind? What's gone wrong for them?
So I think traditionally in India, textile business are not wealth creators. I mean, they are extremely capital intensive. I also feel that somewhere, it's more about the labor arbitrage in textile, So where countries like Bangladesh and Vietnam have overtaken India now. And I don't see that, coming back for India, as India moves up the value chain. So like even Arvind, it was valued at 6,000 crores at the time of demerger. Now we are talking about a market cap of 1,400 crores. A very low promoter holding. I also feel the promoters somewhere are focusing on their branded business and kind of left away this business. Even despite a low promoter holding, I haven't seen any kind of a market activity or any attempt to creeping or increasing their stake. I have stayed away from textile business as such. So I'm not tracking Arvind very closely, but I think it's a bad business.
Okay. And the final stock we want to talk about is we're in the midst of earnings season, so we're asking our guests whether they found any result, one stock or one company which the results surprised them. Sangeet, among all the numbers that came out, was there something that caught your eye?
So HDFC AMC, we were all expecting and we were all talking about the distributors commission being taken away, so there would be a hit on the incremental growth and all, but they reported 18% growth on the AUM. Fairly substantial despite the market condition, and more I think 20% growth on the equity AUM. The market share, I think they captured another 150 basis points in market share. So the profits were up about 40%. So I think that that number looked a little out of the box for me. Even the Reliance asset numbers which came yesterday, looked fairly decent. Not comparable to an HDFC AMC, but I think the financialization of savings theme is playing in some sense, and especially in the B-town markets, as we see from their presentation.
Okay, so AMC as a pack and HDFC AMC, what according to you, Samir, stood out for results?
So I think particularly results were still expected to be better off, but I think Asian Paints decorative volume growth and the margin, that surprised me. On the side that the decoratives momentum even on Kansai Nerolac is there. It might get subdued in the quarter two because of even the commentary which they have come. But I thought the auto OEM business or the industrial slowdown will actually impact the numbers. So I think that positive result was more there over there, but I would like to see Q2 as well.
Okay, that's the view that's coming in on the final stock. But with that, it's a wrap on this truncated edition of Hot Money. Thanks to my guest who come in today for this edition and given all the views on the stock. Thank you so much for that, Sangeet. Thank you so much, Sameer. Ask BQ comes up next, 8 into Bloomberg Quint.